Hey everyone, welcome back to Corporate Decoder, the place where we decipher corporate filings so you don't have to. Today we're diving into a filing from MAIA Biotechnology, and trust me, there's more than meets the eye in this biotech's financial maneuvers. It's not just another round of funding, it's a peek behind the curtain at how they're fueling their ambitions. Here's the headline. MAIA Biotechnology announced on February 24th that they're raising approximately $1.43 million through a private placement, which means they're selling shares directly to a select group of investors rather than through a public offering. But digging deeper reveals a few interesting details about who's investing and where that money's going. The company is issuing 894,300 shares of common stock to these accredited investors, along with warrants, which are like options to buy even more shares down the line. The shares were sold at $1.50 each. This is where it gets a bit more intriguing. These new warrants allow investors to buy another 894,300 shares. The interesting detail is that they can buy them at $1.85 per share, that is, if the investors choose to, starting 1 year after the warrants are issued. They have 6 years to decide, and that is likely because the company's board expects the price per share to increase more than that. Here's a twist. Some of MAIA's own board members are participating in this private placement. 2 directors subscribed to purchase shares and warrants for a total of about $87,500. This is done, according to the filing, to align the interests of the directors with those of the company's stockholders. In short, it means that these board members are putting their own money where their mouth is, which can be a good sign. Specifically, Stan Smith is buying 25,000 shares and warrants, and Ramiro Guerrero is buying 33,333 shares and warrants. So there may be good confidence in where the company is going. Now, a key point, these shares and warrants are being issued as restricted securities. This means there are limitations on when and how these investors can resell these shares. So what's the game plan for all this fresh capital? MAIA intends to use the money to kickstart Part C of their Phase 2 THIO-101 clinical trial and for general working capital. The THIO-101 is the company's lead drug candidate, so it's going to be used for the most important trial that is ongoing. If you're curious about the specifics, the filing includes the forms of the purchase agreement and warrants as exhibits. These documents spell out all the details, obligations, and conditions of the deal. But don't worry, we did the hard work for you. Legally speaking, these shares and warrants aren't registered with the Securities and Exchange Commission, or SEC. The company is relying on exemptions under the Securities Act of 1933 to conduct this private placement. This means they're not offering these securities to the general public and are following specific rules for private sales. To keep the public informed, MAIA also issued a press release announcing the pricing of this private placement. This is standard practice to ensure transparency and keep investors in the loop. Now let's zoom out and put this all into perspective. MAIA Biotechnology is a clinical stage biopharmaceutical company, and like many biotechs, they're in a constant race against time and money. They don't yet have a commercially approved product, so they rely on raising capital to fund their research and development. This private placement is a lifeline, providing them with the necessary funds to advance their THIO-101 clinical trial. So, what do we make of MAIA's situation? On one hand, this funding is crucial for advancing their clinical trial. It shows that some investors, including members of the board, believe in the company's potential. But on the other hand, raising capital through private placements can be dilutive to existing shareholders. It increases the total number of shares outstanding, which can lower the value of each individual share. Additionally, the success of MAIA hinges on the outcome of their clinical trials. If THIO-101 proves to be effective and safe, the company could be on its way to big success. But if the trial fails, it could be a major setback. MAIA is playing in a high-risk, high-reward field. Their future depends on scientific breakthroughs, regulatory approvals, and their ability to navigate the complex world of pharmaceutical development. Looking at the filing alone, the company seems to be actively managing its finances to support its primary goal, advancing its clinical trials. The decision of board members to invest is a positive sign, potentially indicating strong confidence in the company's direction. However, investors should be aware of the dilution risk and the inherent uncertainty in biotechnology investments. In conclusion, MAIA Biotechnology is a company with potential, but also with significant risks. The private placement provides them with the necessary capital to continue their research, but their long-term success will depend on the success of their clinical trials and their ability to execute their business strategy. Thanks for watching. If you found this analysis helpful, please give us a like, leave a comment, and subscribe for more corporate decoder content.